Prepare now for a $1,000 XRP. Credit Suisse, one world currency, will rise like a phoenix spawning from the ashes. Potential XRP XLM partnership. That's what a lot of people are saying. In this video, we're going to discuss what the CEO of Credit Suisse says, what Credit Suisse is, what's happening with them right now on the verge of a collapse with their stock being down over 95%, what they're doing right now that is comparable to the 2008 subprime mortgage crash, and some key differences there on how that relates to the current stock market right now. And are they really in that much trouble, and how big is this? Because this is a big deal we need to pay attention to. And then throughout the course of this video, we have a lot to unpackage with you guys on what they're doing to save their ASS and stop themselves from absolutely collapsing. We have to talk about the US dollar and in correlation and inverse correlation to the entire crypto market cap. We have to talk about XRP, XLM, XRP price prediction, XLM price prediction, as well as how to calculate market cap on what XRP would need to do in terms of market cap to reach a $1,000 price prediction. So with all the hype boys out there and fanboys for XRP and XLM giving you these fake price predictions, I'm just going to deliver you nothing but the facts and the truth in this video. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. Let's run it. All right, let's get right into it. Welcome back to the channel. So on coinmarketcap.com, just under $1 trillion in this whole entire industry. 24-hour volume is $54 billion. When we look at Bitcoin sitting at $19,500, down in the past 24 hours, along with Ethereum and really the rest of the markets. XRP, however, is up over the past 7 days, 5%, not doing too much in the past 24 hours, but sitting above 50 cents. So we're going to unpackage in this video what is going on, starting first with this clip right here about what the CEO of Credit Suisse had to say.
The part that struck me is the metaphor the CEO uses, is that Credit Suisse is looking to rise like a phoenix. That's from the ashes. And so you're looking at the CEO acknowledging to his employees that this is not an easy task by any means, but it's something he's trying to rally the troops around and is asking them to get along for the ride.
So here's why this is important, because in 1980, The Economist came out with this and said, get ready for a world currency with a phoenix in the back of it. So a lot of people in the XRP community are saying that XRP is that one world currency, and what's happening with Credit Suisse right now is a domino, and it's a tipping point to lead to XRP. Is that really true? Is XRP going to be the one world currency? Well, let's unpackage this and let's just talk about the facts, because what is Credit Suisse? Well, they're a global investment bank and financial services firm founded in Switzerland in 1856, one of the oldest and largest banks with total assets of $755 billion. 22.7 billion in 2021 was their revenue, and their assets under management is 1.5 trillion in 2020. And if we're looking at this right here, a combination of the top two banks in Switzerland would create the world's 16th largest bank with 1.9 trillion in total assets, according to the S&P Global Market Intelligence data, and their combined market capitalization would stand at $69 billion. And as you can see right here, Credit Suisse right here is at the bottom of the list. However, nonetheless, it is on the list, and that is important. That is very massive, because what is happening with Credit Suisse right now in these key questions that people are answering, calling it a Lehman moment, very similar to 2008. So they're one of the oldest and largest banks, and what's happening with them, the buzz all over social media, is after its credit default swaps, which is nothing but the protection that credit instruments have against default, jumped sharply to levels last seen in 2008, and this brought its stock down by 95% from its all-time highs. And if we look here on TradingView, we can see back in 2007, right here, when it was upwards of $80. Right now, it's sitting at $4.85, and there was a recent bump up, from $3 to try and protect, this company and this stock. And I'll talk about what they did here in a little bit, but the main thing that I want to cover with you guys is what caused them to get to this point, because given how large and systematically important Credit Suisse is, together with Deutsche Bank, or whatever you want to call it, douchebag bank, Credit Suisse has 2,800 billion worth assets under management. In comparison, Lehman Brothers stood at 600 billion, and the current crisis to be another Lehman moment is what people are claiming, because douchebag bank has lost 31% of its market cap this year, and Credit Suisse stock has lost over 50 50%, 54% of its value in the exact same time. And now if we're looking back here, if we go all the way back to, Wall Street Journal back in 2008, this is what was being posted all over the front page. Mounting fear shakes world markets as banking giants rush to raise capital, and Lehman shocks the world as it hits the market. And if we were to go ahead and we look at the stock market, the S&P 500 right here, what really caused this collapse? Well, before, this whole Lehman debacle took place, the markets was already in a decline. As you guys can see right here, where the markets would dip, people would say, back up the truck by the dip, it'd form a new high, buy the dip, it'd form a new high. Then we saw this head and shoulders pattern. It break below the neckline support. We see one bounce up where this exit market is right here, and a lot of people were exiting the market, and the news in the media was saying subprime is contained, economy is strong, buy the dip, when in reality it was in a downtrend, and just a correction, stay the course, is when Lehman shock began to hit the world markets, and we saw the S&P 500 just completely fall off a shelf, and that's when everyone was getting out of the market, when that was actually the best time to enter the market. So I've traced this up to the S&P 500 right now, and is it possible that we see the same thing? Potentially. I'm not saying that this will happen, but this question mark right here, this area is right when the whole Lehman shock hit the world back in 2008, when it just fell off of a shelf. So over the next few months towards the end of this year, we are in one of the most critical times in human history with this could potentially be the biggest stock market crash in world history this year or early next year, so you have to be ready for it. So when we look at the moving average right here, there's the 200 moving average, and when the S&P 500 came back up to retest the 200 moving average, this was this neckline where very, very similar to what we're looking at right here when people were exiting the market because we saw a drastic turnaround and the market flipping bearish. Now, when people are buying the dip, that is what is happening right now in the stock market. This dip is getting bought back up. We see this moving average in yellow, which is the 2-year moving average that you can see right here, that it could come back up and retest. And if we see a roll around, what is that domino moment that is going to crash the S&P 500 down to the 4-year moving average that you can see right here in green, if that were to happen? Well, let's talk about it. Is this the domino? Is this the domino effect? Because looking back here, we see Credit Suisse is a smaller domino, but it's a big domino nonetheless. And it is one of those banks that it's a critical bank that people are saying is too big to fail. Now, we all know that anyone that says that too big to fail is not really true. And I'm not saying that the stock market is going to do this, but very, very similar to what happened in 2008, you guys can see the market is following almost identical to what happened in the past. And the next move for the S&P 500 would be a short-term recovery followed by some domino tipping effect that would crash the markets to form a low, and then us working our way out of here over the next few years. And I want to talk about how this would affect the cryptocurrency market as well too, in the entire total market cap on where we are in terms of the 4-year moving average, the 2-year moving average, the 200 moving average, and the 50-day moving average, because a lot of people are saying this would be the tipping point for the one world currency, and a lot of people are arguing that would be XRP. So let's dive a little bit deeper. Here's why Credit Suisse is in trouble. The answer lies in credit default swaps, also known as CDS. Simply put, credit default swaps is an insurance policy that lenders take against the loans they have given someone. So in this case, Credit Suisse borrows money to do business, and its lenders take insurance against Credit Suisse defaulting on its obligations. For this, they have to pay a premium to the issuer, just like you would pay a premium on your insurance policies. The problem with this is the price of these Credit Suisse credit default swaps are off the charts right now, higher than they were in 2008 when the banking industry collapse being imminent. And this combined with Credit Suisse inefficient risk management policies, it was involved in 2 massive debacles. Greensill and Archegos Capital, which its investors lost billions of dollars. It's limited the bank's avenues for obtaining finance, further increasing its borrowing costs. And very similar to what happened in 2008, mounting fear shakes the world as banking giants rush to raise capital. They're doing everything in their power that they can to raise capital to prop up their stocks. And so what did they just do? Well, they did a $3 billion bond buyback and their stock price jump. Very similar to what happened to how the Bank of England boosted their bond buying to $100 billion, and now they are slowing their pace. And if we look right here at the Swiss franc to the US dollar, well, the Swiss franc in relation to the US dollar has been declining since 2021. And we see these lows right here, the support level that it could be heading to very, very soon. And the last time that the Swiss franc was in this range to the US dollar was back in 2019. And before then was 2014, early 2015. And so when we're looking at France's 30-year government bonds right here, very similar to the United States 30-year government bonds right here, we saw a massive drop in the price of bonds. And conversely, we saw a massive increase in the actual 30-year government bonds yield. And right now it's sitting at 3%. So this is one of the craziest times in history. If we're looking right here at what I'm seeing on the chart right now is an inverse head and shoulders pattern where you see the left shoulder, this neckline that is resistance, the head, the right shoulder. Once it breaks above the neckline, a retest and a trend reversal. So when we look back here, we see the left shoulder right here. We see the head right here. We see the right shoulder right here. We see the neckline or the resistance right here. We saw this breakout, retest, and a trend reversal for their government bond yield. And inversely, the government bond price is forming a bottom right now. Once we see a bottom, we will see the market do its best to reverse. And we will see a neckline form. When we see a break of the neckline, we will see a trend reversal over the next, 5 to 10 years at some point. But some people are arguing this may never happen. But what would happen here is there would be an all-time high that would be formed for the yield, maybe 4%, 5%, maybe higher than that eventually we would reverse to the downside. Now, very, very similar to the US dollar, if we're looking at the US dollar right here in relation to the crypto market, well, the crypto market, Bitcoin included in all altcoins, is in blue right here. Back all the way measuring from March, we can saw when the US dollar started declining, that's when we started to go on this massive bull run for the cryptocurrency market. And as you can see right here, this neckline in yellow was where the US dollar, when it broke out of this, that was the time that the cryptocurrency market finally hit its all-time high. And Bitcoin hit its all-time high, every cryptocurrency, excluding XRP, because XRP was cut short because of the lawsuit that we're going to talk about in a little bit and what it would take for XRP to get to $1,000. But when the markets reversed for crypto, the US dollar went on this rally. And now the real question is, how high will the US dollar go? When will it top out, and when will it reverse, and what will happen after that? Because I've talked about it in previous videos, how I do feel that there is a little bit lower to go, and we are very, very close to the end of the bear market if the bottom's not yet already in. And the reason why I feel that is because the rest of this year, there's still some FOMC meetings where Jerome Powell is discussing raising the interest rate, the effective federal funds rate. And when they raise interest rates, investors pull money out of the markets, out of the stock market, out of the cryptocurrency market, and they put it in cash, which has historically been a slow, bleeding, dying dinosaur, but it just decreases slower and it bleeds out slower than these volatile crypto swings. So eventually the dollar will top out at some point. And I've talked about this in previous videos, how we could come back up to retest the highs from the year 2000 during the dot-com bubble boom, where if we break above that and we clear that resistance, the next resistance would be the all-time high from 1985 of 165 on the US dollar index. Now, anywhere between here and 165 is a possibility. Now, if the DXY were to go upwards of 165, we would see the worst stock market, the worst cryptocurrency crash in history, and we would see the crypto total market cap, Bitcoin, all altcoins get absolutely destroyed over the next year or two, and we would see the bottoms even lower than the 4-year moving average. However, a lot of crypto bulls are saying that the bottom is in, because if we were to compare this back to 2018 right here, where you guys can see the price, dropped over, from the all-time high right here in terms of market cap, we saw an 80+%, 85+% drop. Some altcoins were losing 95 to 99% because when something goes up an insane amount, of course, obviously it can lose 95 to 99% of its value, compared to something like the stock market where it has less volatile swings than crypto, because crypto is the most rewarding, but also the riskiest asset class. So what you're playing in right here, where there is no risk, there's no reward. And like Uncle Ben from Spider-Man says, with great power comes great responsibility. So being in crypto right now, you have big power, but you got big responsibility to protect your bags at all costs. We can see in COVID, it did close below the 4-year moving average, but this was a V-shaped recovery, very, very quick. And we are at an important precipice moment in time right here, where if this 4-year moving average in green that you can see right here holds, if this holds, then we would see something very similar to what happened right here, where we would start breaking out from this point and we would go back to retest, the all-time high, maybe see some consolidation, and then this would be the low for this recession or this potential global depression. And it would just take some time to pass the all-time high again for the next 3 years. So this right here is what a lot of people are expecting. Then for the final year from 2024 to 2025 is where we start to see, the market cap go upwards of, $10 trillion for the crypto market. Now, here's the key that you got to understand, okay? Here's the key that you got to understand. In order for something like XRP to hit $1,000, there needs to be one of two things. Number one, massive liquidity and massive market cap growth. Number two is a reduction of supply combined with massive market cap growth. Same thing for XLM, because if we're looking right here, how we look at market cap, market cap basically is circulating supply multiplied by price. So how you see this stuff is very easy. On coinmarketcap.com, you can look at the price and you see the market cap right here. So let's just round this off for even purposes. And XRP is a $25 billion market cap with, let's just round it up because it's at 49, say 50 billion circulating supply. So what we would do right here is XRP, $25 billion market cap. XLM right now has a $3 billion market cap with a, what's their circulating supply? 25 billion. So if we were to take XRP, 50 billion circulating supply, okay, multiply that by the price prediction, which would be $1,000 that a lot of these moon boys and hype boys out there are saying that's going to happen. Well, they're not backing it up based on math or anything that I'm showing right now. So 50 billion circulating supply, multiply by $1,000 price prediction. Guys, this is absolute best case scenario, because the circulating supply, you have to understand, changes because they put more into circulation as these get released from the escrow account. So, the owners of Ripple, they have a certain amount locked away in their escrow account. When it gets released, it gets sold in the market, which increases the circulating supply. And when market cap grows and circulating supply increases, that creates price suppression. So I've given you best case scenario here to show you like maximum possibility of what this would take for a market cap and liquidity injection. So when we look at 50 billion circulating supply multiplied by $1,000 price prediction, XRP would have a $50 trillion market cap. Now, two scenarios here. Scenario number one is, in order for that to happen, the entire cryptocurrency industry would more than likely need to have a 100 trillion, 200 trillion, $500 trillion market cap for XRP to hold 50 trillion of that. Because if we're looking back here and we look at Bitcoin, well, Bitcoin has a $370 billion market cap right now. That's it. Bitcoin's not even at $1 trillion. So for XRP to hit $50 trillion when Bitcoin is only 37% of $1 trillion is a big stretch. I'm not saying that it's not possible. I'm just showing you one scenario, okay? One scenario is we need to see Bitcoin, because if you divide, let's just say 25 billion by 372 billion, then XRP holds roughly 6%, between 6 and 7% of Bitcoin's market cap. So if 50 were to be the market cap XRP needs to have in order to have $1,000 price, then Bitcoin would need to have about a $1,500 trillion market cap, which I don't even think that's a trillion anymore. That's like quadrillion or something like that. So there's just not enough money in existence for that to even possibly happen. That's scenario one. Scenario two is XRP becomes the one world currency, the reserve currency for all of these central banks, Credit Suisse included. They transition all of their capital into it. We see Wells Fargo, Chase Bank. We see the largest companies that you can see right here, JP Morgan. We see Bank of America, Citigroup. All of them declare that XRP is the currency that they are going to all use. And this allows for that massive liquidity injection. Now, one thing to note is that XLM is very, very similar to XRP in terms of what the banks are looking for cross-payment solutions. And if we see XRP sitting at 51 cents, Stellar Lumens is at 12 cents right now, up 1.9%. XRP is up 2.69%. We can say that XRP is the older brother, XLM is the younger brother because of market cap. But XLM, does have a huge potential here because when we look at the all-time high, back in 2017 of just shy of $1, and we can see that the bull run for XLM was cut short as well too. I am expecting massive things for both these cryptocurrencies. Now, I don't think XRP needs to hit $1,000 or even $589 like a lot of people are saying the Simpsons are predicting in order for it to be successful. We obviously need to see Ripple come to a settlement agreement or win the lawsuit for any sort of positive price action for XRP. And then that would cause a break of this downward trending resistance right here, retest, and then XRP to see momentum to the upside over the next few years. But if the lawsuit drags out, then XRP would just consolidate sideways or even trade a little bit lower for the next few months and potentially even next few years, depending on how long they drag it out for before we see a breaking moment for XRP to go back to retest the high of 2021 and eventually the high of 2018 before the markets absolutely tanked, where XRP lost over 90%, arguably about 97% of its value because XRP was the largest performer in 2017 when we saw this massive rally, from January of 2017 to February of 2018 right here. XRP was the largest performer out of all altcoins, which means that if it's the largest performer and you see these parabolic green candles going up with massive liquidity and market cap injection, of course it's going to drop 90 to 99% to form a low, but that low that it formed was still 3,700% above the low in January of 2017 before that bull run. So you are stomaching volatility is the price you have to stomach for massive opportunity. To see 57,000 plus and even more than that growth out of an altcoin like this, just to stomach, a lot of news companies, this time we're like, XRP's lost 96% of its value. Well, no, it hasn't, because if you bought down here, let's say, for example, you bought XRP at 0.005, and even if you sold at the worst possible point to sell at 11 cents back in 2020 in March, well, you would be up, 20x on your income, meaning if you put $10,000 into XRP back in February of 2017, just $10,000 would have turned to $200,000 if you sold XRP right here. Now, if you just held XRP from that point, obviously you'd be up even more right now. So when in doubt, zoom out, have a long-term perspective on and have a long-term holding strategy for this, but don't rely on just one altcoin to be able to set yourself up financially for the rest of your life. Because if, for example, this scenario does not take place and we don't see a rebound off of the 4-year moving average and we see, Credit Suisse being the domino that tips to other banks in the United States absolutely collapsing. Let's say, for example, hypothetically speaking, you have to look at this worst case scenario and you have to plan for this, because if you don't, you're an idiot and you're going to get wrecked and you're going to be a broke boy living with your parents for the rest of your life, working at McDonald's, praying that XRP is your savior that gets you out of McDonald's from sweeping and mopping floors. I used to scrub dishes at a hospital for $7.25 an hour. So I can talk like that. A lot of people say I'm talking down to people that work minimum wage jobs when I actually used to make less than minimum wage. And I was actually making less than the person who cleaned out the bathrooms and swept the floors at McDonald's, because I worked at a hospital, at 16, 17, 18, 19 years old, guys. So I did that for about 3-4 years. And I got up to $7.50 an hour. So pat on the back right here for getting a raise of 15 cents a year. But you cannot plan and you cannot prepare for your altcoins to make you wealthy. You have to have a passive income strategy, because in order for XLM to even hit a $250 price prediction, XLM would need to have a $6.25 trillion market cap. Now, looking at Bitcoin having 300 billion, that's a long stretch. I'm not saying that's not possible by 2030, 2040, 2050, maybe, depending on how much money the Federal Reserve continues to print. But as long as they continue to print money, the spending power of your dollar is going to continue to go down, and you need to have a solution.